Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight it was very volatile after an unexpected rise in the US consumer price index triggered a brutal sell-off for the Australian dollar. The market plummeted from the 69-cent region and now currently trades around the 67 and a quarter. According to the US Labor Department, the US annual consumer inflation was recorded at 8.3% in August, higher than estimates of 8.1% increase. This now has baked in a potential rate hike of 75 basis points when the Federal Open Market Committee, or the FOMC, monetary policy seating convenes in its two-day meeting on the September 2021. There has been still much talk that FOMC may actually raise rates by 100 basis points instead of 75. Well, I feel 75 is on the cards and always has been, and therefore let's see what unveils on the announcement from the Federal Reserve on Thursday at 4 a.m. Sydney time. Eyes will be turning to the US Federal Reserve Chairman Jerome Powell when he takes his question and answer in his press conference. In the previous meetings, the FOMC raised the federal rates by 75 basis points in June and July meeting, which was followed by 50 basis points in May and 25 basis point rise in March. So turning to the technical aspect, we can see here that the retreat from that top side of the range around 69 now focuses back on the bottom side around 67 figure 35. Beneath there still holds the key support level of 66.80.85 and is anticipated that another rebound should emerge if this level is contested. The euro didn't break the downtrend line, as you can see here, and from the challenge was rejected, and along with that, with the dollar index, which measures the greenback strength against a basket of six major currencies, rebounded or surged from 107.60 low to currently now trade at 109.80. In light of the pattern, I still feel that the RSI hasn't fully broken down in terms of how it has looked over the past, and the MACD is still holding to a positive signal. If so, then we could see further gains into today's price action and therefore look back towards the 10000 area and reassess, see if we can actually get a little bit higher to the 10060 area. Still keep an eye on the downside. The support is still holding relatively firm at 98.80. Well, dollar yen surges and now back to the top side of its range around 1998 and therefore looks towards this level seen around 145 figure 50 area. I do anticipate that the bears are likely to be looking into this region here due to the divergence that's seen on the RSI, so we could see another rejection. Along with that, there has been much talk at these levels around 145 to 146 that the Bank of Japan may intervene and therefore sending the price lower. So it's still very much a nervous area to trade around, so do be careful if you are going to participate. Looking at the pound, well, the bearish or engulfing candle took out 2 days price action. But still, like the euro, the market is still holding relatively, so I feel, bullish. In the fact is that the RSI didn't plummet as heavy, and therefore keep an eye on today's price action and see if we can get a rebound and look towards that top side, somewhere around 115.70.80. Looking at gold, well, the market rejected that top side due to the dollar rally and now put a slight dent in the actual pattern. Still keeping an eye on the bottom side of the range around 1,680 to 90, as I feel that the bulls will step in again. It is a key level and therefore could see good demand to return back towards the top side somewhere around 1,722 on the day. Finishing up with oil, well, the market rejected off that bottom side here around 84 and now posting a slightly firmer close into the New York session, which suggests that we could see another up test. However, we still haven't quite got past that level, which is around 88.5 after briefly looking there overnight. If we do get a cut above that level, then we are looking up towards $91 a barrel. But with the slightly bearish candle in play, may actually put a bit of a cap here at 88.5 and therefore could see a slight pullback, but still finding support anywhere from around $83.90 to $84 a barrel. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoyed a great start to the day.